Hey, good morning. Comment allez-vous? You guys ready to get going? Hey, it's a Friday. Non-Farm Payrolls 181. 181. NFP 181. Okay, let me get my chat over there so I can see it better. So you a bull or a bear? Wrong button. All right. All right. Good morning. Welcome to FX Street. Trade non-farm payrolls live. Month 181 in a row. Yeah. Month 181. Hey, that's 15 years plus. Well, that's awesome. Thank you for being part of the FX Street YouTube community. Thank you for all the positive energy you put into this thing we call Forex. No, Master, it's only in 181. Cool. How many have you attended? How many NFP live webinars, live streams have you attended in the last 15 years? I've attended most of them. Nice. 150 plus. Yeah, that's very cool. First, right on. Very cool. First, well, welcome. Well, then let me introduce myself. My name is Wayne McDonell. I'm the Chief FX Market Strategist for a foreign exchange brokerage firm called TradersWay.com. Now, check this out. I've been trading for years and years and years and years. About 20 years approximately. Self-taught, by the way, because when I first started trading Forex, there were no Forex gurus. FX Street was a tiny little website that was just building a community, which was fantastic. There were no books on Forex. Amazing, right? And the interesting thing is, Amazon.com was a tiny little startup that most people hadn't heard of, and they did sell a few books online, but they didn't have any Forex books. So then I went to Barnes & Noble. They didn't have any Forex books. So I went to the Stanford University campus, went to the finance section and economics section, and looked for textbooks on Forex. That's when I started. Before Forex, I was a venture capitalist. Before that, I was an entrepreneur, helped people raise millions of dollars for their high-tech startups. And before that, I was in the nonprofit world, running a company of about 3,000 people, and sat on a board of directors with George Soros. Oh, I worked at NASA too. Cool. Nice. Why did I work at NASA, you say? That's a great question. I wanted to be an astronaut. So I was interviewed over the course of 2 years by all branches of the military, got offers from all branches of the military to fly for them, to become a pilot. I accepted the offer from the Navy to be a pilot for the Navy. They gave me the best offer. Great. Awesome. Signed all the paperwork. Signed up. Hey, not bad for a Canadian, eh? Yeah. Oh, for sure. Joined the U.S. military. And on your very first day, you go to something called MEPS, which is medical testing. And that was the day I found out I was diabetic. And I said to the counselor on the way out, when he gave me a subway token, I said, does that mean I don't get to fly airplanes? And he said to me, son, I wouldn't give you a rifle and send you into the desert, yet alone give you a $20 million airplane. So I took my subway token and found my way home. Yeah. So anyways, you're welcome, America. Yes, I did sign up. All right, so cool. That's my little story. So now that we know each other, how about my trading? What do? I'm a macro trend trader. My book is called Strategic and Tactical Forex Trading. What does that mean? I develop a strategy first, and then I deploy tactics to execute the trade. Very nice. So what do I do for strategy? Macroeconomics. That's it. Macroeconomics. I have to know absolutely everything and then accurately predict the future every single day. That's all. Yeah, NASA. Yeah, I used to. So I was an aviation research assistant. It was part of my my flying path, and I used to do virtual reality. If you think about it, 30 years ago, you hadn't even heard of virtual reality. Well, that's what I was doing. I was doing VR stuff for NASA. Cool. So yeah, so macroeconomics, because I'm studying the flow of capital across borders around the world. Okay? So again, I'm self-taught. I taught myself technical analysis, taught myself fundamental analysis, passed the series 3 and all that kind of stuff. And then, I have them right here. And then in the last 5 years, I thought I should have a formal education. So I got that degree and I got that degree. Cool. So one of them says I know a lot about economics, macroeconomics. So now I am a professionally trained macroeconomist. The other one says I'm an expert in finance and management of finance. So cool. So now I have a formal education. So when I started, I was probably just like you, where you probably know very little of everything, right? I knew nothing of everything. So I had to teach myself technical and fundamental analysis. So technical analysis was interesting. I'm like, what do these moving averages do? What's a MACD? It was really strange, right? Just really strange. So I had to figure out combinations of things that work and don't work and all that kind of stuff. Meanwhile, I knew several professional money managers that had hundreds of millions of dollars. And I remember one time we're at like a dinner and they're like, hey, Wayne, do you still do that Forex stuff? And they're laughing at me under the, like, here's this idiot. Here's this young idiot. He's trading Forex. What an idiot. I'm like, yeah, I'm still doing Forex. They're like, you're still using technical analysis? And they would laugh again. They would pretend they're not laughing, but they're like, people would openly laugh at me. Openly, just in my face. They're like, there's two stupid things in this world. One of them is trading Forex and the other is using technical analysis. And I'm like, really? So I stuck with it despite all the negativity. Now my Porsche is faster than their Porsche. Ha! 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 How about that? So anyways, that's the story of my life. Okay, so if you're starting here, if this is your first day of trading Forex, at least now, right? Now there are people that are here to help. Now there are resources, okay? And a place like FX Street is amazing because you have access to so many gurus. But I've been trading Forex longer than your last 5 gurus combined. So anyway, so I'm here and I love you and I want you to succeed. Ask questions, get involved, take notes. Okay, so today we'll talk, I'm sure we'll talk economics because this is non-farm payrolls. Okay, and then I'm sure we'll do technicals because we'll have some volatility. And then at least maybe for the last hour, I'll just take questions. What do you think? By the way, is 3 hours okay to do this webinar? Are you okay if I hang around for 3 hours? I know that's very unusual for FX Street. 45 minutes to an hour is just not enough for the Wayne. Okay. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Wayne Brown says never been sick. Well, it's not necessarily true. You still have to trade when you're sick, right? So anyways. Cool. So how does that look? Oh, you know what we probably need? I probably need to double click this and hit copy. And then I probably need to double click that and open that up and hit paste. And then I hit done. And there's the chat. G'day, mate. Oh, yeah. How's your mum? So good. Now we got the chat. Okay. Well, Bart, no, I don't have stock indices on here. It's not that we can't talk about it. Okay. But what we can talk about is correlation. So I look at this and I can tell you the Dow is up. Oh, good one, HK. Oi, oi, oi. Although I think I was doing an English accent, but I guess if it sounds like Australian, that's fine too. Okay. So, Bart, how do I know that? Yen is down, dollar's down, so Dow is up, S&P 500 is up. Done. I don't even need the chart. Honestly, I just rebooted my computer. So I got three things running. My Trader's Way account, YouTube chat, and my Streamlabs OBS. It's the only 3 apps I got running right now. So I have no idea, but I know I'm right. Okay. And that has to do with the flow of capital. What we call in this case, what I'm doing is risk on or risk off sentiment. Okay. Dave is scratching his head and says, hey man, how do I get this template? I've contacted everybody in the world, but I can't find Wayne's indices. You should contact me, Davey. Yeah, you got to go to metatraders.com. Metatraders.com. Just solved your problem, Davey. Okay. So anyways, this is risk on. We have mediocrity on the pound, but we've been living with mediocrity on the pound for a while. The Bank of England doesn't really know what to do. Yeah, I get it. I don't know what they would do, right? Aussie also, right, smells like mediocrity. Okay, smells like Teen Spirit. So that doesn't really give us a lot to go on. Euro, okay, yeah, it was strong, then it was weak, and then maybe strong again, maybe kind of. And CAD's strong. Why is CAD strong? Did you guys see that copper hit an all-time high today? Think of it. Right? Since the Bronze Age, copper has never been this expensive. Can you imagine that? Never in history has copper been so expensive. Well, Canada's a really interesting case because they have a lot of oil and gold and copper and nickel and uranium and potash and wheat and barley and flax and beef and, lifetime TV shows. They have a lot of everything. You need it, Canada got it. Okay? So Canada is benefiting from high commodity prices. Oh, okay, so it's doing better, but you can see it was strong, then gave some back, now it's strong again, so sort of down in London a little bit here. And by the way, these are indices. So this is CAD versus everything, Euro versus everything, Aussie versus everything, Pound versus everything. Okay? Zambia is rich in copper. Another reason to live in Zambia, right? Palladium hit a record of 3,000 today. No kidding. Isn't that amazing? So I don't know anything about palladium, but I bet you anything Canada is one of the largest exporters of palladium in the world. I'd be shocked if it wasn't. Okay. Zambia indeed, yeah. Cool. Zambia. Isn't that where Angelina Jolie lives? All right, so that's cool, right? So that's what I see there. Not a lot happening in the moment. Probably leading up to NFP, we have this mediocrity. Well, it's not that surprising, is it? So we're going to have to talk about non-farm payrolls. No. Really? Okay, let's take a look. See it or bead your eyes? All right. Okay. La, 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 la. Too bad. FX Street used to promote this a lot. Now you can't even find this webinar. How'd you guys find the webinar? All I knew. Wow, nowhere on the front page. Hey, there's Davey. You guys should hang out with David Pegler. Good human being, great trader. Maybe it's under, where would it be? Where do they put? Where are the webinars? I don't even know where they put it anymore. Oh, I'm the top of that calendar. Very cool. 1 second. All right, I'm back. And I got a bigger gap. All right, cool. So, yeah. So let's take a look. Okay. No, FX Street didn't forget their way around FX Street. I don't work. I'm not an employee of FX Street, by the way. All right, cool. Okay. All right. So here I am looking at the calendar. We're expecting about 1 million jobs. Okay. So is that important? Live shows at the bottom, really? Live shows. You have to go all the way to the bottom of the page to find a live show. Huh. Well. All right. Well, they know how to build a navigation for their site, so that must be the way to do it. Hey, crypto. Prophets of rage. All right. So is the 1 million jobs really that important? Maybe if you go to this live coverage. No. All right. Well, I guess FX Street doesn't love me anymore. I guess I'm out, huh? Wayne's out. Wayne is out. Boo. All right. Fine. All right. No, not so much. So what we're looking at, and let me get my drawing tool going, is really you have to do some, some math. So what we're going to look at is jobs. I guess I should try it differently. Let's say we had jobs like this, then COVID, and then this. Okay? That's kind of what we're looking at now, is based on how many jobs we used to have, how many do we have now? And as we go through time, the question is, are we here? Are we here? Are we here? Or are we higher? Okay? Or even higher, right? To this point. Okay? And what we're looking for is employment as it rises should lead to an increase of productivity. And what we're thinking is the productivity is a regain of old productivity lost during COVID, right? So what, some quick math here shows that as of right now, we're about 9 million jobs short. Now, we got to add to this math. That's back when we were at, 3.5% unemployment. Okay. Or 3.5% was full employment. Okay. Full employment. Okay. Now, how do you get to 3.5% full employment? Well, we were above potential GDP. So this was an unsustainably high level of employment. Okay. Okay. So as we creep back, we may not get back to full employment. We might get to, let's say, 5%, right? Full employment, which is equal to more of a natural level of unemployment, which is different from the old number. So just for fun, let's just say this was 3% unemployment, right? So if we're 9 million jobs short of what we used to be, you got to go 9 minus 7, right? The difference here is 2, because we're not going to get to 3%. We're only going to get to 5%. Okay, so we're right. So 9 minus 2 is what I meant to do. Is equal 7. 9 minus 2 is equal 7. So now we're 7 million jobs. Again, this is all rough guesstimate kind of numbers. I want you to follow the logic. Oh, hey, thank you, FX Street. Look at that. They just popped it up. Thank you, FX Street. Don't blame the moderator, though, right? Right? All right. All right. 7 million. So my general kind of guess to look at this is we're 7 million jobs short. So if we get 1 million jobs today, we still have a long way to go. A long way to go. A long way to go. Could be to the end of the year kind of stuff. Alex says, Janet Yellen was talking about raising rates to prevent. No, she should. What she's been saying is the opposite of that, Alex. But maybe she said something yesterday or something. But typically what they're talking about is an overshoot. Okay? Okay? How many people understand the concept of overshoot and what it means? If I gave you a blank piece of paper, you could sit down, draw a few lines, and label your chart, and then explain what an overshoot means. How many people could do that? And how many people here cannot do that? You might even be asking, like, why is that important? Well, the Fed has been talking about it for an entire year. And if you can't do it, then you don't know something obvious. Think about it this way. The central bank of the United States dollar, the one that controls the value through manipulating supply, has told you specifically what their plans are, and you don't understand. That can't be good, can it? Let me say it differently. April of last year, Jay Powell told you to sell the dollar. I told you that I heard him say it, and I was going to sell the dollar every day for 5 years. Okay? Holy smokes. So let's do it quickly. Let's do a quick and dirty. You guys want to do a quick and dirty? We'll use this one. The other one's too pretty. All right, let's do a quick and dirty. All right. Let's draw potential GDP. Okay. I guess I should probably label my chart. Sorry. And we'll label it like time and interest rates. Growth, percentage growth. So Y. We'll call that Y. All right. This is called potential GDP. So we'll call this Y star. What is potential growth, by the way? What is growth? What is growth? Y is equal to C plus I plus G plus exports minus imports. So, this is productivity. You might know it as something like GDP, some form of GDP, maybe nominal GDP. This is consumer spending, business spending, government spending, and spending by foreigners. Cool. So that's potential. And what does that mean? Well, you take your all your capital, and ideally capital to the alpha, plus your labor to the alpha, for example, your smart labor force and your awesome technology. You throw in some entrepreneurialism, which I think is just pure alpha. And, right, it will equal some maximum level of productivity. Okay? There's a maximum amount you could possibly do. Mathematical formula. All these inputs will create some sort of output. You can be less effective at doing it, but the full potential, the maximum output you could achieve would be this Y. Okay, great. So we got all that covered. Easy peasy lemon squeezy. Now, there's potential and then there's reality. Okay? 2008 financial crisis. Okay? All the way to 2020 and then Okay? Now, it's funny because this looks a lot like the job market too, doesn't it? Yeah, well, they're related. Believe it or not, when people have jobs, they consume a lot. Consumption goes up. When people are consuming a lot, businesses are profitable, so they invest either into new capital or into depreciation. Right? Governments tax more, so they have more revenue, so they spend more. And then because consumption is up, imports are going to be up. Okay? So anyways, there's a lot going on here. Okay? All of this is related. Okay? If you lose your job, C goes down, I goes down, G might go up to offset all of that, and M would go down. Okay? All right, so anyways, what we're looking at now is this question of, are we here or are we higher? Well, we can't be at potential GDP because we have less jobs than before. Now, what I'm saying is we were at 3% unemployment here, or to say it differently, how about this? We were at 97% employed. Okay? And we're not there now. So we have higher levels of unemployment, lower levels of employment. So we're not there, but we're somewhere below potential GDP, but getting closer every month, right? So this is what you've probably heard people talk about as a productivity gap. Great. And what Jay Powell has said the Fed is going to do, and by the way, they said it a year ago. So a year ago, we were down here. Oops, let's mark it this way. A year ago, we were down here, and I said, sell the US dollar for 5 years. How many people know that to be true? April of 2020. April 19th, I think it was the day. But how many people here know for a fact I said on April, start selling the US dollar and do it for 5 years? Hear the drummers. Hear the drummers get wicked. Yeah, cool. So now we're moving up, getting closer and closer to potential GDP. And this is what's in my mind. If we still have 7 million jobs to go to get back to, right, full productivity or potential productivity, the Fed back here a year ago talked about an overshoot. Well, this would be an example of an overshoot. So Powell said, oh, we might want to get here before we jack up interest rates. Let the economy come back. Let it overheat. In fact, they announced before April, so maybe December of 19, the Fed was talking about things like having a flexible target, meaning if they used to have a 2% inflation target, they might allow inflation go to 2.5 before raising interest rates and then bring it down, where that is even a new idea. So here's the old, productivity gap, and this is an example of an overheated economy. Breaching above potential GDP is the overshoot. So the media loves to debate that the Fed's going to start raising interest rates soon. And I'd say, well, they already told us when they're going to do it, 2023. Right? Am I right? Did they tell us it would be 2023? Yes, they did. So I don't know why the media has to debate this. They already told us. And they also told us they're not even going to think about raising interest rates until we overshoot. So the most important thing here that we're talking about today before non-farm payrolls is how close to an overshoot are we? Well, we can't overshoot until we breach above potential GDP. And in my humble opinion, based on the research that I'm doing, we are not at potential GDP. So let's go back to what I said earlier. If we have 7 million more jobs and we're adding about 1 million jobs per month, we have at least 7 months to go. Well, shoot, that's the end of the year. Whale oil B. We're talking next year a taper. And we're talking 2023 interest rates going up in the United States. But we already knew that last year. OMG. If you didn't know that last year, you have a gap in your foreign exchange knowledge that needs to be filled. Okay? You need to know this stuff. Because then you can say, oh, I guess I'm going to sell the dollar. Okay? Cool. Okay? Pig getting slaughtered as it should. Okay? So we're getting close to this singularity event in the price time continuum. Okay? Okay? All right. Cool. So we need to watch non-farm payrolls, but as I've been telling you, I'm not so much interested in the headline number, but instead, what does it mean? So if we add only 700,000 jobs, I'm not that disappointed. That's a lot of jobs. If we add 1.3, I'm like, okay. But it's not likely to change policy at the Fed unless it's 5 million jobs. But we know it's not going to be 5 million, right? So right now it should be on trend. This is why you need to separate news from fundamental analysis. Fundamental analysis is the trend in the news data points and what it means to current economic conditions and how the central bank will respond. Okay? So all of this is pretty much baked in if you understand fundamentals. The actual headline numbers, not even that important, unless it's shockingly wrong. It comes out a negative number or it comes out 5 million, that would be crazy. Another thing that we got going on today is Cad job reports and later on IVPMI, both of which are great for scalping, skippity scalping Cad. Cad is super red hot right now and I'm loving the Cad. Loving it. And then also we have, ISM services, right? No, it's not. It's not services. Nope, we don't have services today. Business conditions. Oh, right. Okay. But I love that Cad, so I'd love to see this come back up. We can take a quick look at her. So you can see we hit the target and we should be done. Although some people are having, their target might be 121.25, not 121.50. Okay, you can see the central predicts the S2. Not quite there yet. So the real decision process here is, will this happen next week? What do you think? Are you guys going to be sellers of this next week? So I'm short at 124, basically 125. I'm short at 125, and we're at 122, less than that, 122, right? Cool. Cool. I definitely have permission to take profit. Okay? Definitely have it. Definitely have it. Okay? But my job here is, or the goal of this isn't for me to teach you your risk management in this case. It was the entry was the most important part. Cool. Okay. Beautiful, 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 beautiful move on our kitty Cad. Cool. Short zone looks like it's about 122.22. Okay. To maybe 122.50. Okay. But notice, absolutely, totally have permission to have taken profit. Now is a little lame. You probably should have done it way down here. Obviously. This green zone, by the way, means up. So if you're a bear, up is not good, is it? Darko says it's the lowest since 2017. Oh, really? Interesting. You mean the value of the Canadian dollar's gone up since oil was zero? Really? That's unbelievable. Okay, I'm being facetious, but I'm trying to make a point. Cool. Oh, I wanted to make a point. My training courses at fxbootcamp.com have been, 76.4% discount since COVID for about 14 months. That discount is ending soon. I'm going to kill that. So the next time I see you, there's a very, very good chance prices are going up. I'm in America. COVID's over. So there's no need for a COVID coupon code. My pleasure, Roderick. So what I did in response to COVID is I gave everyone 76.4% discount. So instead of watching Netflix all day, you could watch training videos about Forex trading. And then I increased my FaceTime with clients by 500%. So I lowered prices dramatically, almost to zero, and I increased my FaceTime by 500%. Now it's FaceTime is back to normal. Actually, it's double. So now it's only 200%. So that's good, but that ain't going to last forever. So last chance basically is what I'm saying. Okay? So that's fxbootcamp.com. Last chance. Okay? I'll even show it to you. You click the big button. It says, yeah, you can learn how to trade plan, swing trade, fundamental analysis, day trading, price action, basic trading. You know, they're 10 videos. They're like hours and hours, 10 hours each, let's say. MT4, MT5, Introduction to Forex Trading. I'm doing a macro course right now. So here's what you do. You go to step 2. You see the $1,618. You type in that coupon code right here. It's a test. So you watch the price. You ready? Boom, 382. not 1,600, less than 400. That's going to end very soon. Probably the next time I see you, it'll be gone. I've been running that for 14 months to help people during COVID. You got to move. So give me the juice. Let's take a look at commodities before we go into NFP. I'm kind of waiting for the headline number because, people exiting a market due to potential risk isn't necessarily the market, right? It's people getting out, not people getting in. The link is called fxbootcamp.com. fxbootcamp.com. You can do it. You can do it, my friend. You can do it. Minimal is being sarcastic? What? Yeah. Cool. All right. Hey, PD. All right, so let's take a look around here. Let's see gold. Okay, this we did, what? April 1st, I think, isn't it? Okay, we actually had planned this trade when we were here, and it fell. Had it all set up. Okay, we had this up, but it was an untrustworthy rally. Too early, in fact, is what we called about it. Okay, then it hit here on April 1st. Now, the interesting thing about that is up here as it was falling, we were waiting for April. That's why this one was sort of a false rally. We're like, it's exactly the right price. It's doing exactly what we want. But it's untrustworthy because it's too early. It's too early. Like, oh, we're on it. We were on it and trading it, but I'm like, it just feels too early. It feels too early. Right? It was weird. And I'm like, really? Now? Okay, but I don't know. I don't think so. Sure enough, here we go. April 1st. So since then, we had the up, down, down. There's your second buy. Up, down. Third buy. Okay? And our target right now is 1850. Now, dropping into a smaller time frame like an hourly chart, the plan for the week was to buy here and hit this price. Okay? Now, let me ask you, for those that have joined FX Bootcamp and taken the training course, what does this mean? Okay, what does this specifically mean in this very specific circumstance? Counter trend to where? Give me the specific target. Check this out, guys. If you're staring at this and you don't know what it means, but 1, 2, 3, 4, 5, 6, 7, 8, 9 people, 10 people know it very, very specifically because I've taught them, then maybe you need to join. I don't know. Maybe that's a testimonial. This right here means it's going to fall to this price. Okay? And if you don't know that, you're getting your butt whooped. You're getting your butt whooped by people that know. So it's not your fault if you're not getting the results you expect. It's just you don't know enough. You're missing something. That's all. Yeah, for years, right? Chuck Duck's like, dude, if you're at Non-Farm Payrolls Live number 81, 100 months ago, I would have taught you the same thing. Okay? So that's that. You either know or you don't know. It's binary. Okay? That's all. Enough said. You don't know that, you're going to get your butt whooped. Alejandro says, will the Fed decide to abandon the weak policy? Alejandro, I just did probably a 12 to 15 minute overview of exactly that. So you missed it, man. You're going to have to go back. I just addressed that whole thing, Alex. Yeah, hey, no harm. It's a good question for sure. It's a great question 20 minutes late. Right? That's like being on Jeopardy and you're like, what is the Ottoman Empire? And they're like, dude, the TV show is over. The studio audience is filing out the door. Alex Trebek already handed out the prizes. And you're like, I know. But they're like, yeah, that was the right answer. You should have been here 20 minutes ago. All right? You would have nailed it, dude. That was awesome. It's 20 minutes late, though. So anyways. All right. So that's that. XRP going up, up, up. You are not alone. Look at this, dude. No, stop it. Stop it. Look at that, huh? Why don't you just trust in my technical analysis? Why cry when your trades start to die? Wake up. Wake up. Cool, Nita. So I just started a 6-week course at MIT studying cryptocurrencies. No, I do not advise people to take trades during non-farm payrolls, but you can. So let's cover the basic scalp. Something about a bathroom stall. Something about a girl in a push-up bra. Say goodbye to Ma and Pa, 'cause with the bird in the shade. You're like, wait, what are the words? With the bird in the shade, it's a lonely view. And you're like, what the hell is he talking about? All right. Yeah, okay, I'm going to focus on Euro today. I'm going to do some Euro. So let's clean our charts here. Let's do some basic. Simple. Let's do some simple. All right. What we're going to do, failure to communicate. What we're going to do is this. We're going to trade a 1-minute chart. And non-farm payrolls is going to come out and it's going to do something like this. Over the course of 2 hours. So the question is, are you a bull or a bear? If you can't answer this now, it's the major reason you are not getting the results that you want. If you can't answer that, you're not even a market participant. You're a liquidity event. Which means when I want to sell, you'll buy it for me because you don't have a plan. And when I want to buy, you'll sell me your position. Why? You don't have a plan. You don't know what's going on. Okay? So what I'm going to do here is have you identify levels of support or levels of resistance in which you would consider buying or selling. So you could do something like this. You're like, well, this might be interesting. Okay? You could say this might be interesting. Okay? So on and so forth. And you decide whether you want to buy or sell. Okay. That's trade number 2. I already published this on FX Street like 5 years ago. So you already got that. Now, that's the counter trend trade. Really, if I'm only measuring this as a trend, meaning a 1-minute trend. The other one is the high volatility event-driven strategy. And what that says is if this turns candles green, we're going to wait for a little pullback and then you're going to snap it north. Or vice versa. If this goes green, green. Okay. Oh, wait. No, I just misspoke totally. If it goes red, okay, you're going to have to wait for some greens and then push it down. Okay. It's a high volatility event-driven strategy. I've taught this every single non-farm payrolls. I've taught 181 times. So I'm assuming most people here know it. Plus, I published how to do it on FX Street, a big, long, thick document. Okay? How to plan and prepare for the non-farm payrolls and all that. So how to build a model. So let's go back to FX Street. FX Street. Maybe somebody can give us the number. Oh, looks like up. Okay, looks like up. Let's see. 1,500 pips. $1,600 pips. Chuck, he even paused while typing it. Yeah, that's really funny. $1,650 pips. $1,080. It's funny, it hits 1618 and stops, huh? Yeah. Well, this ain't going to last forever, my friend. So make your decisions. Just farting around. $1,700 pips. So I'm up 300 pips for the day. Yeah, but besides that, sorry guys, I must be tired. It's been a long day. Cool. I like being right. Yay me. Yay me. Let's do a quick look around the world. This is all dollar, by the way. Very little yet reaction out of the yen. CAD is weakening. Aussie hasn't gone up at all. Pound is weak. This is just the dollar falling. Yeah. What does the dollar mean? The NFP. Okay. They missed it. And for those that are worried about inflation being so high, the Fed has to kill the economy. That obviously is nonsense. Just ridiculous to even think about it. So the Fed will not taper anytime soon. The Fed will keep emergency policies. And inflation worries are unwarranted at this time. But dude, I've been talking about this I talked about this last summer. So anyways, don't worry about it. So right now, the trade hasn't even gotten good yet. Okay? I need Aussie to go up. I need CAD to go up. See, I'm probably losing pips on CAD. I'm not making any pips on Aussie. And I just made 300 pips. I've made 300 pips in the last 4 minutes. Okay. Is that a first at FX Street to make 300 pips in 3 minutes? Wow, I could do a YouTube ad. I just made 300 pips in under 3 minutes. Okay. But the only thing that's happened is the dollar lost value. The things I'm actually buying haven't increased in value yet, is the idea. So it might even be better next week, I hope. Okay. Okay. Does anybody know when I'm going to take profit? Hang on. I can't read my cell phone. The brightness was turned off. When am I going to take profit? Sorry, staring at my cell phone. Okay. June what? Okay. Well, it's helpful to know that in advance, right? Definitely not at the end of summer, Andres, because I need to rebuild the portfolio at that point. So it'd be too late, really. At that point, I might as well just hold it. Okay. Okay. Aussie's starting to gain. Euro's starting to gain. CAD's still losing. So that might give me an opportunity to trade that next week, which I'm excited about. Okay. Pig For those in my swing trading group, we talked about this Great British Pound being a really piss poor trade relative to other things, and look at it. Right. Can somebody give us the CAD news? I guess I can just go to the calendar. What number did the CAD give us? Well, we can take a look here. CAD unemployment rate went up. Canada lost jobs. So why would that be good for the Canadian dollar? So somebody's like, why is the Canadian dollar weak? Well, why would that be good for Canada? Okay? Forex Pipper says, looks like things came out opposite of expectations. And that's why I always tell you to do your own job. Always. Imagine there are 25 experts around the world, and their only job is to look at whatever source of alpha they can get. Public data, interviewing employers, this, that, and the other thing. And they pull all this together, and they give you an estimate of what they think non-farm payrolls is going to be. How the heck can these guys be so wrong so much of the time? Do you know what they actually do? They say, oh, I don't know, it'll be a little higher than last time. So like these numbers where they're like, oh, well, they're expecting 978. 99% of the time, it's just some guy throwing a dart. He's not even doing a job. If you talk to the 10 largest employers in the United States, and then you talk to a whole bunch of small businesses, and then you did this and that and the other thing. You looked at ADP, but then you talked to all ADP's competitors, and you're really gathering some intelligence, right? You would know that it wouldn't be good. So I've gone around my neighborhood, and I've talked to multiple small business owners. They want to hire. They can't find anybody that will take the job. Because right now, you're making $20 an hour on unemployment. Thank you to Joe Biden. I don't know if that's true, but there is something wrong where there's plenty of people that want to hire employees. Nobody's willing to take the job. Again, not my opinion. I've talked to multiple different small business owners here in my area in totally random. Like I talk to everybody, whether it's a construction crew, I talk to a small engine repair shop. I look at restaurants, just, I don't know, driving through life. If you want to drive a gasoline truck and deliver gasoline at night, I can get you a job today. If you want to unpack a truck at night at Home Depot, you can get a job today. Yeah, the truck shows up in the middle of the night at Home Depot. All you have to do is unload it and move it into the store. Great. But people are like, you know what? That's in the middle of the night. I don't want to do that. Well, then you're not starving. You're not hungry enough if you're like, well, dude, $20 an hour to unpack a truck, it's not enough money. Dude, then you're not hungry enough. Seriously. Literally every business in my town wants to hire somebody. Okay? And apparently no one wants the work. There is an employee shortage where I live. So anyways, Kiwi's starting to gain some. That's good. I'm happy on that, although I don't believe I'm on Kiwi. Aussie's starting to gain some. Euro's starting to gain some. That's good. Yen is getting strong. Whoa. What? That I don't like. Weak dollar's great. Nothing's really happening on my position, so everything's neutralized. So I'm gaining on Euro and losing on CAD. Jimbo's like, that's the mentality of free handouts. Yes. That's why I explain to people there is a difference between Keynesian economics and pure handouts. Okay? So you hear a lot that the government increasing spending by trillions of dollars is Keynesian economics. No, it's not. Okay? Yes, building bridges and highways, right? Infrastructure projects, yes, that is Keynesian economics. Stimulus checks, not Keynesian economics. Keynes, Hayek, Milton Friedman would all freak out. They're like, what the hell are you doing? Okay, so the government will say, well, we're increasing our spending, which will increase consumption. But they're like, no. We don't, it's not consumption that we're interested in. Yes, consumption is part of this, let's say. This is a domestic economy. Okay, the government doing this and doing this, okay? This is a transfer payment. If the government simply gives a consumer free money, that's a transfer payment. Okay? And it does not lead to productivity because they didn't do anything. It doesn't increase productivity, but it will increase the money supply. And when you do that, right? So I just did a macro course, so many of you guys would know this, right? Okay? Money supply times velocity is equal to what? Y times price. Or the velocity of money over nominal GDP is equal to price. And if you carry all this through, you're going to raise in a domestic economy, you're going to increase, right? You're going to increase prices. You're going to increase inflation. Why? You gave people money for nothing. What the central bank is trying to do, what do I call this, by the way? Let me redraw this just to make sure you guys are on the clue train. Okay? What did I call this area? Let me say from here to here. And then I believe I did it in yellow. What do I call this area here in yellow stripes? The productivity gap. So when the Fed does emergency monetary policy, what are they actually trying to do? Stimulate the economy to fill the productivity gap. What the heck does free money have to do with anything? It doesn't increase productivity. Okay? So Milton Friedman would be against it. Keynes would be against it. Hayek would be against it. When the stimulus came out, Larry Summers, former president of Harvard University, right? But he's on like the president's Council of Economic Advisors or something like that, and a whole bunch of other things. He used to run Goldman Sachs. Okay? He said it was stupid. It makes no sense. He went on TV multiple times. He wrote a big article, I think, in the Wall Street Journal or something, and all this kind of stuff. And he's like, this makes no economic sense. It's crazy. It's dangerous even. Okay? So Keynes would say create demand through demand for what? Productivity. Really? Hey, if you take this shovel and dig a ditch, I will pay you money. Because at the end of it, you will have money and we will have a ditch. We meaning everybody else in society. So, for example, the CCC the Citizen Conservation Corps or something like that, back in the time of Keynes and Roosevelt in the United States during the Great Depression, paid, right, every young man that wanted a job. You had to be, I think you couldn't have a family because they were going to take you away from your family. So you couldn't be married. You had to be unemployed, obviously, and I think you had to be a man. But they would send you off to like the mountains and pay you to make a hiking trail. And they did it all over America. I just recently went to a CCC place here in Georgia. There's a few places. Like Roosevelt used to actually come to Georgia and contemplate how we get America out of the Great Depression. I've actually been to the spot. Okay? But anyways, all these great minds are thinking about, how do I increase productivity? Not, maybe I should just give everybody money for free. That is stupid. The government did it back in the 2008 crisis, and they gave all the banks, good banks, bad banks, mediocre banks, it didn't matter. Take all this money and do something with it. So some of them bought jet planes. Hayek would have said, you know what? If you got a bad bank, it should fail and go out of business. Okay, then we wouldn't have any bad banks. No, we bailed everybody out. So there's dangerous, right? Danger. Okay? Who said it today? Oh, Jamie Dimon at JP Morgan today said, hey, government, if you're going to do an infrastructure project worth trillions of dollars, you need to give us the 5-year plan and tell us specifically what projects you're going to do, why you're going to do it, and when they're going to be done. And if you're going to raise taxes, you should have an itemized list of exactly, precisely how you're going to spend the money. And Jamie Dimon, again, head of JP Morgan, is simply asking this. Hey, government, have a business plan, a clearly defined, outlined, clearly organized plan like JP Morgan would do for, right? Or Jamie Dimon would do for JP Morgan. JP Morgan has a business plan and it has to answer to its shareholders. So why shouldn't the government? You want to spend $5 trillion on what? Tell me which one, which project, when is it going to be done? Who's going to follow up to make sure it's actually done? Where does the money go? If you're going to raise my taxes, for what reason? Tell me how. Show me. What is it? Maybe, right? Just show me the plan. A simple PowerPoint presentation or ideally an Excel spreadsheet would do. Nope. Okay, so Geithner screwed it up back in 2008, and now we're running into our new problems, right? But these are all logical, right? So when Geithner handed out billions and billions and billions of dollars to every bank in America, he didn't even tell them what to do with it. He didn't even say, this is for your liquidity. He didn't give them a time frame. He didn't ask for them to pay them back. I think they did, actually. They have to pay us back at some time, but not too early. Right? And there was no tracking mechanism. They didn't say, we're going to follow up every 30 days, and every 90 days you're going to have to submit this, this paperwork or something. He just simply gave them billions of dollars and said, don't go out of business. And then when Jamie Dimon complained about this because he was running JP Morgan, and he's like, dude, we don't have a problem here at JP Morgan. We don't need a government bailout. We don't want the money. We're a good bank. We're not insolvent. We cleaned up our risk profile 2 years ago. It's 2008. We're not in a subprime problem. And the government said this, believe it or not, it's true. You have to take the money. You have to take the billions in government bailout, because if you don't, the whole world will know JP Morgan is a good bank, and therefore know that all the other banks are bad. And we don't want that. So the government is forcing you to take it. But we're not going to ask you to do anything specific with it. There's no tracking mechanism. And if you can give it back to us at some point, that would be great. Obviously not a business. Obviously not a business. Government's dangerous, guys. It's stupid. So I love that JP Morgan, or sorry, I keep saying it, right? Jamie Dimon of JP Morgan, it was either this morning or last night, said, hey, if you're going to raise my taxes, show me an itemized list of what you're going to spend it on. And if you're going to just do deficit spending to build a whole bunch of infrastructure projects, trillions and trillions of dollars, that's really cool. That's very productive. So what's the plan? What projects? When are you going to start? When are they going to be completed? We'd like to follow up to make sure that the money is being spent on time and on budget. How many people here think that's going to happen, though? I think it makes sense. Okay. By the way, I made another 100 pips. Very nice. Cool. So welcome to economics. You guys okay with the economics? You guys okay with the fundies here while we're letting this play out? Let's do around the world. So some of these haven't even started yet. Okay, the dollar's weak. Okay. Oh, my peso, no! This is a trade I tried to catch over and over and over and over and over again. I missed it. This one's frustrating. Yeah, for sure. Oh my God. I don't even want to look at this. Sorry. All right. Here's my kitty cat. CAD weak. Dollars, US dollars even weaker. So I'm okay. Nothing's really happening here. Okay. Gave some back. Made it back. Okay. Freed got it? You guys got it? Jimmy's on it? Oh my God, yeah. Yeah, I don't know. It's weird. It's one of these situations where I'm waiting and waiting and waiting, and then the sniper blinks and missed the shot. What can I say? Aussie dollar. Let's take a look at Aussie. We're coming up to the weekly target here. Okay. So let's change this point of view here. Templates. Let's do swing trading bullish bias. So the trade plan this week was buying the green zone, and we just hit our conservative profit target. And that's the one actually that this predicts. Okay. So looking at this on the weekly swing, if you bought this on Sunday afternoon, which is the best time to swing, that projects this target right here. You knew that on Sunday, not even Monday, Sunday, New York time. Okay, cool. Okay. Cool, right? Yeah, Kevin did the analysis. Yeah. Yeah, that one I just missed. What can I say? I don't trade late, so it's just one of those things. Daddy's doing other work, right? What can I say? Anyways, that's the target. Now the question is, is this a front run? How many people are treating this like a front run? Yeah. Okay. And how many people are going to take profit on the weekly swing? See, the swing is, okay, this to this is the swing. And a front run would be your swing into a position. You know, Pekri, I'm sorry, I think I forgot it. I had, multiple crews in my house. There's, so I got sidetracked, and then I had to take care of my family, and then I had to cook dinner, and then I had to do something else with the family, and then, by the time I got back to the office, I just forgot. Okay, no one's going to take profit? No one's going to treat it like a weekly swing? No one? Well, that's weird. Really? That could be a red flag, right? Oh, Jim, you're out? You took it? Okay, so here's the thing, guys. Let's say Thursday of last week, we planned very carefully, very specifically, that this is a buy zone. Okay? If you got this price as your entry, this would be your target. Okay? Now, because in the pink zone there, we didn't know what the price would be. All we could do is create a plan A and plan B. If this is the entry price and it holds, obviously, if that's the low, then this would be the target. That's why it says aggressive. But this is a conservative trade. It's a classic trade, in fact. Then this would be the target. So think about it. On Thursday, your trade plan was to buy around here. By the way, we also anticipated the exact time, not just the price. So you would have showed up at exactly this time frame and said, oh, long, done. Okay? Not on Monday, on Sunday, with this as your target. So if you took profit there, if you did that swing trade, you nailed it. Yeah, Moreno, I didn't specifically shout out your trade, but we talked about the gold and the counter trend trade. And then I made a big point. I said, hey, if you didn't expect this to happen, you don't know how to trade, because a whole bunch of other people do know how to do that, right? So it was a good point. But I know you bought it on Monday and took profit on Monday, and then the counter trend on Tuesday down to the central, and then probably bought it back up from the central. So, yeah. Better than pound right now anyways. Well, Daniel's saying, well, you might be on the monthly. Well, that's the difference between the swing and the position. Okay? And what I'm alluding to is if it's a position trade, then you'd be front running. So now we got to look at it from a different point of view. Because the new target for next week is 79.37. Okay? And if this pulls it up, it's probably going to be closer to 79.50. Wait, what? Yeah, next week's target. Okay? Once you learn how to swing trade properly, you'll notice that this is, let's say, inverse head and shoulders. Higher high, higher low, higher high, right? And then what? Okay? The issue is you're not going to get this early next week because traders already traded it. See? They bought it before it happened. That's why we call it a front run. And you're like, wait, what? Yeah. See? Up, 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 down, down, buy. So they're already long and strong, down to get the pippin on, right? In this role reversal. Which means if you're going to do the math now, if this closes higher, then this is going to move here, and this is going to move here. And then the top is going to move closer to 79.50. So why don't we say 80? Okay. Now, let me ask the group here. Because if you visit tradersway.com and open up a demo account, in your back office, you'll be invited to my daily Forex coaching sessions for free. Let me say that again. If you visit tradersway.com and open up a demo account or a live account, in your back office, I do live webinars every day, strategy sessions. So one of the things we talked about probably 4 weeks ago is this heading back up to 80. How many people can confirm that? Starting around April 1st, we would develop an upward momentum toward 80. So I would hate to be a trader that doesn't understand that. Because then your shorter time frame analysis would have no bias. You'd have no forward thinking, no forward guidance to your trading. It's like you show up every day and you wing it. You don't know how to do that? That would be a horrible thing. That'd be frightening to trade. No, Emmanuel, compliance shut it down. Okay. Trader's Way is extremely risk averse, and I'm okay with that. Okay. Anthony says solid trade confirmed. Jean-Guy says yes. Gregory says yes. Rick says aye. Daniel says confirmed. Andrea says yes. Big Perm FX confirmed. Jim confirmed, right? I would hate to be a Forex trader that doesn't understand the market enough to do planning. Well, planning comes from analysis. So if you don't know how to do macroeconomics, you're sort of doomed, right? Okay. So when I was at Harvard, I had a senior economist at the Boston Fed teach me macroeconomics. Okay. I took 3 classes on economics, 3, taught by Fed officials. It's kind of why you go to Harvard. Isn't that cool, though? I was so excited. I remember like, oh my God, my professor works at the Fed. I mean, I'm telling you, I was giddy. I was geeking out. Like, no way. Okay? Sort of like, who was your marketing professor when you took that class on branding? Puff Daddy. You're like, what? Puff Daddy's teaching you how to marketing and branding? Yeah. Puff Daddy, P. Diddy. Yeah. Okay. So yeah. Love it. Oh my God. New York Fed and Boston Fed. So I had to do things like I actually read Milton Friedman, So anyways, that's why I have these opinions, because I've spent gross amounts of time thinking about it. So if you don't know how to do macroeconomics, I can teach you. In fact, it's my pleasure to. I love it. Okay. So I have an opinion here. So this trade I'm long at 76. This one I'm long at 77. Now we're at 78. Okay, they're not huge trades yet, but let's change the point of view now. So both trades, as you can see, are break even. We can change the view now and say template, position trading bullish bias. Oh my God. Oh my God. Oh my God. Right? Check that out. I'm long off the central. My target is 79.70. I must remind you, as this was falling in March, I was getting people prepared, ready, willing, and able, starting on this time frame right there, to look for technical analysis to confirm your hypotheses that the Aussie dollar versus US dollar will start going up with a target of 80. So now if it's May and I'm long on the first hour of the month, check this out. What do the Wayne do? The first hour of the month, the first hour. You notice I'm not saying the first day. Okay. Are you trading like this? Okay, right? You drank brandy with Puff Daddy at Harvard? Yeah, wouldn't that be great? No, I had some wicked smart professors, for sure. So I took a class on managing endowments for nonprofit institutions like the symphony, the ballet, your local art gallery. So I took a money management class for, managing endowments. And my professor, I actually developed a relationship with, a friendship. No, I wouldn't say friend. That's too strong. But I wrote a paper and he said it was brilliant. And we decided to, if we can get time, to do, official research, sanctioned and supported financially by Harvard, and then write a true published economic paper on risk management, because I had a different technique for risk management. But what he used to do was he ran the endowment. He managed the money for the Metropolitan Museum of Art in New York City, the largest endowment in the world, public institution. And he thought that was brilliant. And then boom, COVID, right? But imagine learning how to manage, endowment money by someone that managed the largest endowment in the world, right? You're like, that's pretty cool. Awesome. Go to Harvard if you can, man. It's awesome. Or just learn from me. Cool. So we have a question about the Indian rupee. I don't trade the rupee, but let's talk about pips, baby. Let's talk about you and me. Let's talk about all the good things and the bad things that may be. Let's talk about pips. Let's talk about pips. Okay, let's talk about the Indian rupee. Okay, let's talk about this. Okay, one of the major reasons for this trade plan. Okay. 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 One of the major reasons gold went up, in my opinion, is India. So what's different now in sort of late April, early May, than a month earlier than that. No, but you have to step back, Robin. What's happening? We don't want to talk about the consequence first. Higher cases of COVID. It's not even the cases, really. It's the shutdown. Globally isolated. And people being locked in their apartments again. So, if you can't work, you're going to need cash to live. So Indians with money overseas, like USA, EU, right, AU, etc., they had their money invested in these other countries. Okay? Great. Soon as COVID hit, there was a shortage of cash. Think about it. You're going to need to buy groceries, but you can't go to work. So you need to bring money home. So they're like, okay, I have money in Australia, bring it home. So I have Rupee. Bring money home from America because I need a Rupee. Get rid of our euro investments, go to cash, get some Rupee. Which means what? There's going to be more dollar in the interbanking system globally, which means the dollar is down. Supply has gone up. There's going to be more euro in the world than there used to be because Indians got rid of their euro and exchanged it for rupee. So now the euro is worth less because there's more euro in the global interbanking system. Indians that got rid of their Australian investments suddenly have Aussie dollars, right? They get rid of the Aussie dollar to buy Indian rupee. So now there's more Aussie dollar in the global interbanking system. So the value per Aussie falls. Meanwhile, demand for the rupee that's floating around in the interbanking system has gone up. There's less rupee. There's less rupee. There's less rupee. Everyone's trying to buy rupee and bring it home. So the value of the Indian rupee goes up. The euro has fallen. The dollar has fallen. The Aussie dollar has fallen, but the Indian rupee has gone up. Now, the central bank says, whoa, 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 whoa. We don't like this. We want to have weak Indian rupee. They're an exporting nation. So the central bank has to say, all right, how do we weaken the Indian rupee and still maintain a balanced or healthy balance sheet? Okay? So the Central Bank of India, the Central Bank of India says, whoa, whoa, whoa. Well, the Indian rupee has gone up in value because there's less rupee because of, right? Because it was exchanged, right? There was less rupee because it was exchanged. There was less rupee, so there was exchange. So why don't we add more rupee back to the global supply in the interbanking system? Print more money? Not necessarily, Davey. David says print more money, right? Not necessarily. Am I working with the central bank? No, but I've met with central bankers. Cool. Anyways, so the Central Bank of India says, well, if we print the money, it'll be worthless. That's the terrible way of weakening the rupee. That's what an emerging market would do, not right? And if they did that, they would make the Indian economy worthless. Think Zimbabwe. Think Argentina. Okay? So you can't do that. That would be dumb. And Indians are not dumb. Okay? So instead, the Central Bank of India says, well, we have all this foreign exchange in our vault. What should we do? Right? Or they have a whole bunch of rupee in their vault. What should we do? So they can choose. They can raise the value of the Aussie dollar, right? Or they can lower the value of the Indian rupee and vice versa. And all of a sudden you're like, well, they're not actually trying to negatively impact the Australians because the Australians don't want that and all that kind of stuff. So like, well, we have rupee. What could we do with rupee? See, when you have a balance sheet, right, you want to maintain assets. So you have cash. Okay? So what they've decided to do, and of course it's smart, is the Central Bank of India says, well, let's take our rupee cash and exchange it for gold. Okay, so let's just pick a number. Okay, 1 billion rupee in cash. You decline your balance sheet by 1 billion rupee, but you buy 1 billion rupees worth of gold. What's happened to the asset side of your balance sheet? Nothing. You have the same amount of assets. Is gold a real asset? Is it a liquid asset? Yeah, it's pretty close, right? It's not M1. It's not M2. It's pretty close. So they buy gold and put it on their balance sheet. But what do they buy gold with? Dollars. But here's the thing. They have dollars in their vault. It's just another form of cash, but it's under foreign reserves. No, instead they use rupee to buy more dollars. Ha 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 ha! Wee. This is it. Clicking moment. Click, 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 click. Synapses are firing. India takes rupee out of their vaults, goes in the interbanking system, foreign exchange, exchange their domestic currency for foreign exchange, which is the US dollar, and then with their new US dollar, buy gold. And then they bring the gold home. The gold goes into their vault, but the 1 billion rupees in cash are now floating around the interbanking system. There's now more Indian rupee in the market than there was before. And as supply goes up, the value goes down. So you could do it like this. Demand, supply, okay, quantity, price, and you want to increase, right? Increase the supply to supply 2. So you get this. Equilibrium 1 is price 1. Equilibrium 2 is price 2. And the value of the rupee fell. And as an exporting nation, that makes your products a little more competitive versus China's products. So, long story short, you see a shutdown in India, and gold is going to go up. Now, here's the thing. Once again, if you visit tradersway.com and open up a demo account, you can join me for my live groups, totally for free. And we talked about this, 4 months ago? Okay. We saw the Israeli central bank doing the same. Okay. Cool. So somebody wants me to talk about Indian rupee? No. RBI? Yeah. But you have to understand all that. Now, if you understand all that, then do whatever you want to do. Make a decision. Okay? I can't trade rupee, so sorry. But if you're in India, yeah. Now, here's the other thing. You probably should, right? If you understood this and you're in India and you have Indian rupee, you could have made money. Why? Because you know how to do fundamental analysis. Once again, the news coming out, but pow, look at non-farm payrolls, the headline number 200 and something thousand. That's news. That's not fundamental analysis. News is news. News is snooze. Okay, so there's a gold trade there. So 3 weeks ago. So 5 weeks ago. What I teach you is to anticipate this shift in advance. So like as it was coming down, we spent weeks waiting for this to occur. Other traders just show up every day. They're like, what's up, fellas? Are we trading gold today? What? Is it up? Is it down? Hey, what's going on? I don't know what's going on. Are we going to sell it? And I say to you, dude, we are in a pivot profit zone. Did you take profit or not? And you're like, I don't know what's going on. This gray area is where you're supposed to take profit. Okay? This is a front run, plan A. This is plan B. Okay? So, as far as I'm concerned, the stuff we did in April, this is profit-taking time, man. This, right? This is P. Diddy pouring champagne into the hot tub. Not time to get in. Okay? Right? It's not time to get in, man. Not time to get in. What's going on with gold? Do you want to know what's going on with gold? I'll show you what's going on with gold. Huh? This is what's going on with gold, huh? You want the money? It's money time. It's money. Gold, gold, gold. But you made your money last month, yo. You made your money last month. You show up now and you want to know what's going on in gold? Yeah, we're converting it into cash. Do I have a fundamental analysis course? Let's see. Yep. Yes, I do. Yes, I do have a fundamental. It's 12 hours long. Yep. And 76.4% discount. Cool. Yes, I do. Has he? Cool. I am sending you money, yes. If you don't listen and learn, then there's nothing I can do for you. I'm trying to increase your productivity. See, one of the things is that I have found common over the 20 years of teaching people Forex, people show up and they want to get rich quick. It's the dumbest thing ever. It's a poverty mindset. I want to get rich and I want to get rich quick. It's dumb. It's a child's dream. Okay? But if you want to build a business that creates value and you want to work hard, yeah, you will be rewarded. Yes. Okay? Yes, you will be rewarded. This is a long journey filled with challenges and hard work forever. Yeah. But money, what do you mean money? Right? Money. Okay? We create value. And your value is created through alpha. What is alpha? Your research and your decision making. So you can say things like, yeah, gold's been down for 3 months in a row, but that's about to change. Okay? Well, Roderick, what happens to most people that win the lotto? Yeah, they get broke quick, right? Cliche, right? Okay. Yeah. Cool. So, yeah, for sure. Do you guys want to do some exotics? Let's do some exotics. I don't want to look at peso because I missed it. Oh, dang it. Look at it. Look at it. No, I missed it. Son of a. All right, so let's do Rand. Okay. Rand has made a new lower low. We're stalled out on the weekly target. Now, specifically, there's the weekly entry, and this is actually the weekly target. Okay? So we're not quite there yet, but how many people remember having 14 be the target? Well, 14 is just about there, right? So we're so close. Is there going to be one more dip down? I don't know, and who cares, right? You have to click the button, David. Okay. So that's what's on our mind here. So at the end of last month when we were here, I took 500 pips off of this. Now you're like, Wayne, 500 pips on ZAR, those are not real pips. That's only worth $10. Okay, let me address that. What I'm saying is, for every $1 I invested, I made $5. And that ratio is very similar to 500 pips on the euro dollar, right? If you sold one mini lot on euro dollar, so let's say 1 euro dollar mini takes $100 out of your account, right? So 500 pips would be you turned $100 into $500, right? And I'm calling that a pip. So I'm not actually measuring pips and pipettes and points and all these different things. That's just way too confusing. But I can tell you I got an internal rate of return of 500%, which is 500 pips. So that's how I just measure that. So I sold way up here somewhere, and I got out right in here for 500 pips, quote unquote. Okay? Cool. Now this one, if I back up a little more, this one's now, right, I'm short at 1530, and now we're at 1415, right? 15.3, now I'm at 14.2. So that's not bad, huh? That is technically more than 1,000 pips. Not fake Rand pips, but again, that's like a euro dollar 1,000 pip move. Like you bought it at 110 and euro dollar went up from 110 to 111 to 112 to 113. You get it? 114, because a lot of people don't understand pips anymore with fractional. 115, 116, 117, 118, 119, and 120. Like 1,000 pips is a lot. Not pipettes, not pipes, not points. Okay? Okay? Turning a penny into a dime. Turning $1,000 into $10,000. Okay? Cool. Pipperoos. So that's cool, right? So my prediction of the future on the short run is bring it down to 14 and ideally below. Okay, like that. Okay. Cool. And you might remember I sold here in January as well. You guys remember, do you guys remember non-farm payrolls back in, I guess it was February or something? I was up 1,800 pips. So this one I'm only up 1,700 pips. I'm sorry. 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 Sounds arrogant, right? Yeah, I know. Okay, let's break this down. The trade plan was to have the breach higher. Aussie's not doing well right now. Like if I go back to these indices, here's the challenge. Nothing is actually going up. So I'm doing very mediocre right now. If we can maintain the USD weakness, but get some Aussie strength, get some Euro strength, get some pound strength, get some Kiwi strength, then I'll start doing better. Right now, there's actually nothing to do here. I should probably pull the plug. There's nothing going on. Everything is weak right now except Swiss franc. So everything needs to be planned. You need to be planning next week. Okay. I meet with my swing trading group every Thursday. Yeah, Thursday. To plan out trades for the following week. So we're planning, Thursday, Friday, Saturday, Sunday, 4 days in advance. So on Thursdays, we plan trades for Monday and Tuesday for somewhere between 100 and 300 pips each. So we kind of already did all of that work. There's not a lot really for me to do next. I don't think there's anything else to do. We did everything. We talked about central banking. We talked about productivity gaps in relation to Fed policy. We did a lot of technical analysis. We traded the news. We made 300 pips. And now Aussie's generally weak. Euro is kind of just doing the anti-dollar thing. CAD got crushed. Pound sucks. Kiwi's gone nowhere for months. There's nothing really for me to do based on relative strength. So we did fundamentals, right? We did the news. We did a whole bunch of technicals on what? We covered, right? Some exotic pairs. We covered all the dollar pairs. I looked at a bunch of yen pairs. We did some commodities like oil and gold. Okay. John, 2 ways to follow me. 1, visit tradersway.com and open up a demo account, and you can attend my daily live webinars, which are free if you're a client of tradersway.com. I also do FX Bootcamp. So you can go to fxbootcamp.com and put in a credit card, and that's the prerequisite. You got a credit card, baby, you're in. It's less than $10,000. Wait, it's less than $400. Yeah, cool. Pretty simple. Okay. Can you talk about NASDAQ? Not really, but I talked about it earlier right at the opening. Somebody asked me about the Dow. Okay. If the dollar's weak, the stock market's up. But I don't know. And I don't know your portfolio and all that kind of stuff. So we're going to leave it. We're just going to leave it at that. Okay. Gold and silver obviously are correlated. Both are priced in dollars. Both are precious metals. Both would be considered what? M2 or M3. Both could possibly be bought by central banks to devalue their currency. So if you know gold, you should know silver. Can you talk about Bitcoin? Okay, I did Bitcoin yesterday. But yeah, cool. Let's do Bitcoin. Okay. So let me. Okay. So I have to go back a little bit. Hang on. Let's do it on the 4 hour. Okay. You know, so yeah, let's talk about this. Okay. By the way, I bought this. Okay. I saw this. I saw that. I bought, no, I didn't. Wait. No, I bought it at 56. Gee whiz, 56, 64, 58. I bought it at 56. It went to 58. So, oh, I know what I did. It was just a little weekly swing trade. And I got knocked out of break even at 56. That's not 56. All right. I don't know what the heck I did. Anyways, maybe I remember it wrong. But this is the monthly swing. Okay. And your target for Bitcoin as a bull. Okay. I look at this and say it's not a central. So it's an M2, $69,990 and 13.5 cents. Is that right, Kyle? Cool, right on. That sounds really good. Copper's at an all-time high, Sunil. So we already covered that. Yeah, so Fareed says, don't I have a trade on this? Yeah, so I don't remember. It's just another trade. And I got knocked out of BE. It was up $2,000, right? I thought I bought it at 56 and then it went to 58 and then I don't know. But honestly, just another trade. Yeah, sure, Jimbo. You can email me. You know who I am. Yeah, a lot of people are like, Wayne, I don't care about learning all your courses and how you trade. I don't care anything about that. I just want to join your live group. Can I get in? I'm like, dude, I'm not giving you signals. I'm teaching you how to think in a live environment. So like, if you don't know how I trade and my thought process and methodology, then being in the live group would be worthless. Right? But yeah, email me, man. I'm reasonable. If you know me, then for sure. So anyways, guys, yeah, right now it's like, you know, it's funny, right? Like, I can't imagine somebody showing up and now they're interested in gold. I don't get it. Like, clearly you don't know what's going on. So we hit the target for gold. I want to go home. My weekend has begun. You're like, what's going on with gold? It's done. It's over. It's dead. Look at all the people that took profit. They know what they're doing. Okay. Yes, this is a live account. Traders Way Live. Yipper. Cool. Gold sell zone near 1840. But see, I'm not a bear, so I wouldn't cover that. But I get it. I can see why you would do it. It's just not for me. I'm not a bear, so I'm a bull. Right? So I'm not going to look at it from a bearish point of view. I'm not a bear, right? So later today, you got IV PMI for Kitty Cat, so maybe that's going to be helpful. You got the rig count coming out. Okay. And then don't forget, at market close, you get the new commitment to traders report if you do that. All right. All right. So, you know what? I'm just done. Everything's weak. We've hit targets across the board. Why is everything weak? Because everyone's hitting target. They're cashing out and going home. That's kind of like, I know it's 9:43 in the morning and I'm done. So I got some wine to drink, some cigars to smoke, some research to do, right? Forex Pipper says, Wayne, is the MIT course on cryptos or blockchain? It's not the blockchain course, okay? The blockchain certificate is something like 6 different classes, and I'm interested in that, but I just don't have time. I just did 5 years at Harvard. I can't do another 6 classes. But it'd be terribly interesting, but mostly business focused, right? No, I'm doing the cryptocurrency course, which is 6 weeks, not 6 classes. 6 classes, if you're doing 2 per semester, which is a lot, dude, it's a year and a half, right? Like, I don't have time for that. I don't have time for that. But yeah, so I'll have a certificate in cryptocurrencies. But it is really interesting. It should be interesting anyways, right? The former head of the CFTC is teaching the class. So, right. And before he was the head of CFTC, he was a partner at Goldman Sachs. So, should be interesting, right? So anyways, just a little MIT stuff. And people laugh because they're shocked at my brutal honesty. So, you know, on day one, you had to fill out in the class forum, you had to, you know, do a little profile and then state why you wanted to take the class. I said, well, you know, I've been trading currencies and commodities for 20 years. And now that cryptocurrencies are, you know, a viable asset class, my customers are interested. So I should know more about it. But then I said, but honestly, I just thought it'd be great to have an MIT badge on my LinkedIn profile. And people are like, oh my God, that's so honest. I'm like, yeah, I pay $3,000 so I can say I went to MIT. What? I'm the only one? I'm like, bullshit. So anyways, yeah, I think I'll do extremely well. We'll see. Yeah. But anyways. Cave says, Goldman Sachs are criminals. No, they're not, but that's funny. Cool. Yeah. If they're criminals, they go to jail. Cool. All right. Nice. So, peace on earth. May the pips be with you. May our profits be above average. I don't know how you found this webinar. I went to FX Street's website and couldn't even find the link to our webinar. So I don't know what's going on there. FX Street used to love me. I used to be their biggest speaker. I guess now I'm just a nobody. But somehow, some way, you found out about this, and that's cool. So I'm glad you're here. I hope you learned something. I hope it was entertaining. I hope if you're new to all this, I hope I opened your mind. A lot of people don't even think that you should be making thousands of pips at a time. Lots of people think 300 pips in a month is a good month. Some people think 100 pips in a month is a good month. Of course, that's ridiculous. Oh, thank you. FX Street promote it in the newsletter. Thank you. Well, that would probably do it, right? That would probably do it. So anyways, thank you. Now, FX Street has the best moderators in the world. So I'm not picking on our moderator. But I'm like, just where's the love? Man, I'm an only child. And I love FX Street, and I've been working hard with them all these years. So I'm just like, right, I as an only child, I'm either number 1 or 0, right? So I wish it was right there on the homepage like it used to be. You used to be able to just go to fxstreet.com. It's like, you should attend this non-farm payrolls thing. Well, now I see they're doing their own stuff, so I kind of feel like the bastard stepchild. But I love FX Street. I'm just an only child, and I want to be admired and loved and hugged and cuddled and told that I'm wonderful and that everything's good. I need to be told 15 times a day. Okay? That's all. So, so was it fun? Was it entertaining? Did you learn? Did I open your mind? Did you see that there might be, let's say not that your way is wrong, but there's a way to improve as well. Again, I'm a macro trend trader. I think all your trading should start with research and analysis that leads to a bias. I think you should have a healthy combination of both fundamental and technical analysis. I love technical analysis, but I have to have a fundamental bias. My favorite indicators are leading indicators. I like pivot points. I like price action. Okay? My whole career, I separated price action from market forces. I can use moving averages to do that. I can use oscillators to do that. I even use things like market support and resistance, and price support and resistance. Okay? Now you take that, your tactics, and have a good strategy behind it, which is your fundamentals. I'm telling you, your results will improve. I don't care if you're on a 1-minute chart or a 1-week chart. I've done all of that for 20 years. Okay? I do have a lot to improve on, but I've learned a thing or two along the way as well. So thank you for being part of this community. The FX Street community is what I turned to when I was young as a currency trader, and I am grateful to this day. Right? So I'm grateful to this day to FX Street, and I'm honored to be here. This is the 181st version of this webinar, but I had worked with FX Street for probably a year earlier than that. So this is probably my 17th year of working with FX Street, so I am grateful. Other ways to be involved. I wrote a book. It's on Amazon.com, Strategic and Tactical Forex Trading. If you want to learn on my video training courses, that's FXBootcamp.com. If you want to join my live group that plans 300 pip trades, guess what? You have to do the courses first. So you go to FX Bootcamp, pay for them, and then it'll say, hey, do you want to upgrade your account for $99 a month? You can join the swing trading group. That's it. There's the whole sales pitch. You can also visit tradersway.com, open up a demo account or a live account. And in your back office, there's a button to join my live daily strategy sessions. It's about, hour and a half to 2 hours a day. Those are absolutely for free. There's lots of webinars and recordings on FX Street. I've written articles. I've written magazine articles. I've been on TV. There's lots and lots and lots of resources out there to help you. In contrast, when I started trading, there was nothing. So, step up. You have no excuses. You have lots of resources, lots of support. All you have to do is step up and be the hero. And the world is waiting. Humans love heroes, so it might as well be you. But if you think you can get rich quick, you're delusional and childish. If you want to build a business that creates value for its customer base through hard work, okay, now you're thinking like an adult. Welcome to the rest of your life. It's awesome. Peace on earth. May the pips be with you. May our profits be above average. Thank you, moderator.